I look at your EBIT. That's a nice tick, 519 million euros. The estimate was 502. Talk to me about this debt. Why has it risen so aggressively, and what are you going to do about it?
Well, thank you very much, and good morning from our side. Now, what we clearly see is, and you have already mentioned that EBIT was strong, but not only EBIT looking forward, we have the highest order intake that we've ever seen since we started our journey. So the operating figures, the underlying figures going forward and for the quarter were very strong. As you rightly mentioned, raw material prices throughout the year and volumes have risen sharply, especially in the materials businesses. That's why our working capital has risen sharply, as you can see on the balance sheet. We expect for the fourth quarter always a seasonal reduction, and that it all passes through P&L, and that it will be passed on to the customers, so that with a delay that we always have in the raw materials, in the materials businesses, that this will pass through, and therefore we will see a significant reduction. It is always with increased pricings in raw materials that it takes some time to really digest it, and that's the main reason for it. On top of that, we will get in Q4 the closing of the CSA transaction, so therefore the sales price of that asset will come in as well, and that will reduce significantly our net debt figure by Q4.
What do you think that debt will be by the end of Q4? What does significant mean?
Well, as we have given out the guidance that our free cash flow for the full year we expect in a negative mid to a higher three-digit number. Now, given Q3, we have accumulated 2.3, so there is significantly more than $1 billion to come.
Okay. We have a scoop recently, and I need some clarity, which is that you are, as a company, looking at IPOing the elevator components and industrials business. Can you confirm or deny that today?
No, I can't. As what we've clearly said, and this is what you see on our steel business, we think for Steel Europe that consolidation Europe is needed, and we've clearly confirmed that we are in talks with Tata around that. Now, what you're referring to is some speculation that you see in the media, what could be a possible plan B if this was not to come. I can clearly tell you, throughout all our strategic way forwards, we have always considered various options to find out the best one. This is what we did in this case as well, but currently we're in talks with Tata, as we have confirmed, among others, and we will see where this is going, because first of all, we think the highest priority on our portfolio is to find a solution for the overcapacities in Steel Europe and to find a good industrial solution for that.
Just one more thing. You had a supervisory board meeting yesterday. Did the subject of IPOing those three elements come up at the board meeting?
We didn't have a supervisory board meeting yesterday. It was just an audit committee that was usual before we do our announcements of our financial data.
That's me corrected then. Let's talk about steel, because you're trying to do this deal. It's a bit... The market has been waiting for a very long time, Guido, for you to do this deal with Tata. Is there going to be a deadline? Will you get it done before the end of the fiscal year?
Look, I think what is more important is that we really carry on very responsibly the duty of doing a good job there. And as we see, and as we've always lined out, a very important prerequisite is that a pension deal, for example, for Tata gets done. We haven't seen it right now, so that's why still this is a point in time which we cannot influence, and as well Tata can just to a certain degree, because they rely on regulators and other people where they have to negotiate with. So we need to see how these transactions look like before we can evaluate and see what that means for such a transaction, and then we will go on. I think a thoroughly thought-through transaction is a lot more important.
The people that I talked to yesterday in preparedness for having my conversation with you, Guido, said, look, the risk is this, that you do the deal with Tata, you've got a heavier burden here in the United Kingdom, in Wales, with Tata, and that the burden of synergies, if they are to be had in steel, Guido, would fall to the German side. That this is folly, this is a skew of risk which falls to the Germans to pick up the slack if you're to combine these two businesses. What do you say to the people that say that that is an issue?
Look, again, clearly it is important to talk about synergies, and this is what we're doing with Tata, and we have to come up with a very good and sustainable solutions. Otherwise, this doesn't make sense. I think at this point in time, there's nothing more to say.
One other big industry where you have a huge exposure is the auto industry. I've been dealing with Dieselgate, Electricgate. There's going to be fundamental structural change in the auto industry. How much of your business goes to autos, and is there a possibility that you've talked about, that you have a production gap as the auto industry goes into this transition mode?
Yeah, overall, our share of the auto industry for us is about 25%. But let me very clearly say here, there is an important but for us, because it is out of our components business, only 20% is drivetrain. So we're not so much related to the drivetrain itself. It's camshafts, it's crankshafts. We have a strong position there, but this is a smaller business, and we're very strong in chassis, and included in the 25% is steel as well. So therefore, our exposure to the drivetrain and combustion engines is not so strong. And whether we change for more automated driving, this will even be a strong support for our chassis parts, so for active steering, for damping. This will all become more important if you have full automated driving. And the electric drivetrain, again, doesn't affect so much of our business. So therefore, we're really looking forward to the opportunities coming out of it.
Just to close off, obviously the G20 took place in your part of the world. There was a lot of discussion around tariffs and protectionism. There's a lot of tensions over this. The prospect of US tariffs in terms of a risk, or G20 rifts in regards to tariffs, how much risk is this to your business, do you think? Have you run some of the numbers? Can you give us some vantage point in terms of the risks from tariffs?
Look, I mean, we're not, in our steel business here in Europe, we're not relying so much on exports to the U.S. So if you're talking about the tariffs to come possibly for the U.S., I think, first of all, we have to see how this situation will finally look like. There is no report published yet on Section 232, so it's pure speculation, and there are different rumors out and statements what is about to come and when. So I think we have to wait for it. But what I can clearly say is we don't have such a big volume of exports from Europe to the U.S., so therefore there's not such a high exposure. We usually try to produce in the areas and in the regions where we sell our goods. So therefore the largest part, for example, of all our value creation within the NAFTA region, where we sell in the NAFTA region, we produce in the NAFTA region as well. So there are some overlaps we do have, but we try to be as close to our final customers as we can be with our production.